Hi everybody, this is Bitcoin Live with the Power Law and Minotaur team. I am here with Sebastian, Marcos, and Costa from the Minotaur team. And so for the people that have joined for the first time, the show is about analyzing the market using different tools like global liquidity, local liquidity, the Power Law tools. And then we also discuss this trading system that we have developed that is based on the Power Law and allows you to get gains on top of your Bitcoin. There is a link where you can learn more about the system, but also if you want to DM me on X, you can do that, and I can tell you everything about it. Anyway, so let's jump in and let's look at this very nice activity that we are observing in Bitcoin. Let me pull out the indicator I want to show you. That is this one. So this is a brand new indicator. It will be part of a set of indicators. We already have 15 different indicators, and this will be number 16. It's actually multiple indicator at once. Let me see if I can make this a little bit bigger. So what we are seeing here is a few things. So let me explain them. So if you have followed my post on X in the last several weeks, basically it's something that I explored before, but I went deeper, and now I really think this is kind of a holy grail in understanding Bitcoin. So the idea is that if you're focusing on the returns, right? Returns is one of the best things to understand what an asset does, and returns, in my definition, is basically the ratio between the price today and the price yesterday, right? So if you're focusing on that, the returns over time decay. They are not stable. And this is different from other assets that people may be used to, like gold or silver, most of the stocks, because most of these assets, they grow through an exponential, relatively slow. Of course, they can have bursts like gold recently, but over the long term, they follow an exponential. And exponential means stable returns, constant returns. Of course, they fluctuate over time, but their average is constant. With Bitcoin, we see a decay. That is actually, as explained many times, is not a bug, is a feature for Bitcoin, because it allows Bitcoin to have 10-pair returns in the beginning, and that attracted resources, interest, etc., because people wanted to jump in. And as the asset matures, the returns are still amazing. Right now, we are talking about 45% a year, but they are going down relatively to where they were before. And in fact, in 10 years from now, they will go down to something close to 22. It will take another 10 years to go down to 17, because as you go down, they are going down, but they're kind of, these diminishing returns are kind of slowing down. They are approximating. Eventually, there'll be nothing, but it will be hundreds of years from now. But this slowing down, that process is also slowing itself. So one quantity that you want to look that is actually constant in time is this decay, because we can assume that it's due to the fact that Bitcoin follows a power law. So you can correct this decay using a formula, because after all, that is the entire idea behind the power law, that Bitcoin has both stochastic behavior, but also as a formula, you can say deterministic behavior, and you can calculate what it does over time. So if you correct for that, you get this quantity that I call mu, which is basically the average behavior of these power laws. It's almost like because if you divide by this time function, you get the slopes. So it's almost like you're fitting every day a mini power law, and we are going all over the place, right? Because sometimes we are higher than the power law, sometimes we are lower than the power law. I can even show you how that looks like. They look like this. They look like this. So these are daily power laws. What you're seeing here, these green and red vectors. And when it's red, when it's green, means they are steeper than the power law. When they are red, they are slower than the power law. But in average, they follow the power law. The mean is the power law. And the distribution, how spread these values are, is not the bell curve, is something that is much steeper than the bell curve. We say it has heavy tail, so very large values are more likely than in a normal bell curve. It's a distribution that is called T-location scale. So I use that particular distribution. I use the proper statistics. So I calculated mu, I calculated the equivalent of sigma, that is the standard deviation, and I get these green lines. And here I'm showing two quantity as lower mu, that is average over a couple of months, and one that is average over few days. And notice how interesting it is that every time this low quantity intersects the range of possible value, right? This is 65% of, it's not like that because it's not a bell curve, but kind of roughly 65% of the data is within the green and red line. So anytime we go to very high value in one direction or another, we can see a high intersection, right? Intersection with the green line. So plus 1 sigma corresponds to a sell, like we are too high in price. And look at this green dot. The green dot corresponds when we go in the other direction. That is, if I take out the slope, maybe that will be easier to see. So, these are good buying and selling points, basically. See, it's very interesting. Also, what focusing on this quantity, right, allows you, you basically can say right now, you see we are the yellow curve is the fast action of this quantity mu. And you can see right now we are 51 relatively to the average, that is basically the global power law, that is 6. So that is a measure of how bullish we are. If you go far away from the power law average, it means that we are in a bullish territory. It seems usually that when we reach this green region, we come back. Unless, in the past, during the bull runs, this value went crazy, goes all the way to 200. But we are not doing right now. We are staying within this range. We arrive. It is kind of also what Marcus has shown many times in terms of liquidity. So probably there is some kind of convergence between these indicators and some of the things that Marcus shows with the liquidity. Because basically says, if we go too far and reach this value, then we correct and vice versa. So right now we are going there, but we are not quite there to where we are supposed to have some kind of a correction. The other thing that we can do with this information is to do what is called Monte Carlo simulations. So basically, using these statistics, the fact that we have a mean, we have a spread of this distribution, we can create alternative paths. So basically, we launch the dice. You can do it for 90 times, and you get basically the projection for the next 3 months, 3 months, because these are daily values. And so here I'm showing, and some of these paths will go crazy because it's like launching a dice and you get 10 times in the row 6. It can happen, but it's very unlikely, right? So one of these paths, the most extreme paths that I got, I think I'm running like 500 simulations right now. One of these went all the way here. So in the next month, we are going to 178 in kind of mid-November. Right? We can make it longer if necessary, but right now we're looking at mid-November. Mid-November price, extreme price, close to 170. This guy gives equal value to deviation up or down, and so it's likely to go also to 90. But these are basically the possible extreme, right? This brown region is supposed to be green, but we are superimposing to red. This green region tell us more likely path, because there are many more. Basically, what this algo does, it calculates how many of these paths are in a given volume. More there are, more likely it is that we go there, right? There are more likely paths. And so I divided in two regions, kind of unlikely and more likely. So the stream of a likely path is more like 148. Now, the red area, the red region, is the median of all this path, that is nothing else in the power law. So it's really interesting that we can derive a power law not through regression, but actually through averaging all these possible paths of a Monte Carlo. So the bottom line, I think we continue to move along this direction. I don't, unless this yellow line starts to go way above this green line, we are not going to see any really super bullish behavior. It's possible, but so far it didn't happen, for a long time, for this entire time during the bull run. So we are probably going to stick around the power law until we see signs that doesn't happen. Even in this case, we can still see in the next couple of months prices all the way to 140, 150. It's not out of the question. And here I'm even giving probability. Like, for example, it's telling me that we can go to 146, right? Let's say 150 with about 16% probability. So these are some of the analyses that this new indicator gives us. I think it's a very interesting and useful indicator. All right, so I'm ready to give Marcos the floor. I'm going to stop this and go ahead, Marcos, please. Marcos seems frozen for some reason. Okay.
Can you hear me?
Yeah. I want to remind everybody, Marcos and Costa are in Dubai right now, and it's 4 o'clock in the morning. So if you see them a little bit less lively than usual, is because it's crazy time. So I wanted to thank Marcos and Costa to be here and doing this for our viewers, being here at 4 o'clock in the morning. Thank you so much, guys. And sorry to put you through this. Okay, Marcos, Go ahead, please.
I'm not getting the share screen option. It's not giving me the option to share my screen.
It doesn't give you the option?
No.
What about now? Do you see it? It should be at the bottom.
All right, let me see. No, it's not existing. Maybe it's because I'm on a mobile device. I'm not sure.
You're using a mobile device?
Yeah. It's a tablet.
Right.
But it usually works like a normal, but I'm not getting there.
Okay, so Costa shared it.
All right, good.
This is Costa. Awesome. Okay. Can you use Costa one?
Yeah, I can.
Okay.
Okay, Costa, if you could go to the daily, please. Daily time frame, and you can put all the liquidity in there. Yeah, there you go. So just based on that, you can zoom out a little bit so we can see the entire range. Yeah, awesome. So first thing, let's check the liquidity at the top of the zone. We're filling in that 3x, as you noticed from the last time we were here. The top of the zone is at 155, more or less. That's 3x up there, and it's already filling in the gap that's going to be necessary to get there. So that's coming along just fine. Let's check the 5x really quickly so you can deselect the 3. Yeah, so the 5x is also filling in. So we're doing good there. So you can put the 3x back. And then let's move to, so basically when we had the market pullback, we went to what was it, 107-ish. The market made a very hard move to not liquidate that long pool at the bottom there. The market aggressively went in that direction, which had everybody thinking that the bull run was over. And that's the beauty of using liquidity to make our decisions. We were still pretty confident because until that pool gets liquidated, everything remains intact. So the market went really, really hard. It made a strong impulse move that really had everybody afraid that it was going to, you could check the social cryptoverse. Everybody was saying it's over, to double tops. We're going to, to zero, but it wasn't the case. So now we're bouncing off of there really nicely. So that lets us know that the market typically doesn't take two directions at the same time. So we're still liquidating the short positions, and now we have a small pocket of liquidity, internal liquidity. You can see it above the daily, right before you get to the red zone there. There's a tiny little pocket of 25x in there. Do you see it, Costa? Yeah. You can highlight, yeah, right there. That's a target. That's internal liquidity. That's an extremely high probability that that'll be liquidated or targeted by the market. So that's the target right now. That's the immediate target. Is that gives us a clear target to go after. But we have to be careful though that can still take that target and come back. That's still a lower high, technically speaking. You were looking at it from a technical analysis, structure analysis. That would be a lower high. What's that number, Costa? I think that's 118, 119, 120, something like that. What's the number to that? I can't hear you, Mike. Oh, I can't hear anybody. All right. Well, I'll just narrate. So, yeah, that's the target. And then if we take that,
sorry, I was muted. 121.
Okay, so 121. So even if we get there, we can't get too overly aggressive because we still can come and make a lower. That's a lower high right there, technically speaking, and we can still make a lower low, which still technically a lower probability now, but there's still a probability that we can still come take out that long side pull down to 102, I think. So we just have to be aware of that, but still it's looking a lot more bullish. So we have two options. We hit that 121, which is in play, and pull back to the point of control, which he's not showing it there, which is about a 118, pull back and then go from there. Or we put in a lower high and make a lower low and go from there. So we have two options there, two probabilities. But the higher probability is this is starting to get bullish, which is a good sign. So that's an update from Dubai.
Just wanted to look at. Let's just have a look at the 25. I think it's nice to look at the 25x.
Say again.
I think it's nice to look at the 25x.
Yeah,
can you guys hear me?
Mm-hmm.
Just to have a look at this pool getting taken out.
I hear you.
People watching what we do, this move that's happening this morning or this afternoon. I think let's just have a quick talk about what that looks like. Yeah, that's on the 25x. You can see that.
Yeah. I'll speak to that. We've been watching that internal pool. That 25x is internal on the daily. That's internal liquidity. So we've been watching that pool for about a week now. It's been developing very, very nicely. So that's definitely an important pool there, because that gives the price fuel to start moving higher. The problem with this down move was so swift after the all-time high. You can see that tremendous void of liquidity. There's a void like right to the right. Yeah, there's a huge void of no liquidity there. So the price, when it ripped down very, very hard and fast, we need liquidity to start to accumulate so we can get back up. That's what's happening now.
Yeah.
That's
That was
very,
this
very
void here that existed before this one built up.
Yeah, we needed that liquidity. We had to stay down low until we have return liquidity for the price to feel itself moving back up. Now we have it. It's coming in. So that's a good sign.
And as you can see how the candles move so aggressively through these sections when they start to take that liquidity, which you can see that price action.
Yeah, it's liquidating it. Yeah.
You can really see it.
Waited till it built up, and now it's
also
liquidating it.
That top pool above the primary pool is growing as well. I've been paying attention to that, Marcus. That started as a little blip. If you zoom out, it's liquidity running up to around 150K. That little blip is building now, and now it's like beginning to become a pool.
On the 10x or this one here, you mean? I think this 122.
Yeah. So if you squeeze the chart, what you'll see, if you squeeze the chart so we can see up to like 150K in price, what you'll see is a pool. See that there? Yeah, there it is. Now that little pool up there, that's around 148. That's really starting to get legs now, because that started as nothing, right? And that's been building also.
Yeah, and you can see it's merging with it's already merged with the 3x. When it starts to merge with the higher leverage, like the 10x and the 5x, which is like what happened today. That's when we rip through it, which is because the chance of that.
And the Monte Carlo simulations say that it's kind of a range of possible action, for the next few months. It's kind of like the extreme value. So it's nice to see this convergence,
Yeah, absolutely. That's what we're looking for. Those little blips are the clues, the first clues that we look for.
Yeah.
So that's very promising, especially that one at 121. The 121 gives us even more confidence that that's in play. It may not go straight there, but it's definitely
there are pools that are also formed below, right, at 80, 92. And so on, but I think it's quite unlikely we go there,
Hey, Giovanni, it's just like you said, like we said before. That's the snacks that it's going to eat on the way back home. That's the home. That's the return home liquidity. They got to have that to come back later.
Exactly.
Yeah.
Hopefully,
that's one thing.
Hopefully we don't visit those gas stations right now. That's what coming back home. We don't want to. We don't want to tap into that right now.
This is what's really interesting to me, is that the power law support is sitting at around in 2026. It is going to be around this level, right? This 74, 72K, and then correct, Giovanni? 2026 November support. So what we're seeing here is big liquidity pools that have built up. And that you can see another one here. Now, this is going to happen all the way up to as high as the all-time high is. And you can kind of see that there is, whatever you want to call it, fried chicken inventory that could potentially bring all the way back down to the power law support, which historically has always been retested, right? So with these pools there, I think people need to be at least prepared of a return to the power law support. There is liquidity building there. So I just think it's interesting to watch this play out. I'm actually already taking notes on this now in my trading notes, because you tend to forget about these things in about 12 months' time. So it's interesting to make notes that these things were building up, because if they do get taken out and we get back to that 70K support, then you can look back that the future has been written in the present, right? And really a long way away. So I personally think it's very interesting to keep note of, at least.
It is. The 3X is operating about 33%, 35% away from current price. So it's constantly, this fractal nature of the markets is it's constantly building the liquidity that it needs for all sides at the same time. It's just it's an amazing, efficient model of how it works. Yeah, it's building both sides to come back later. But it's also interesting how it just nicked that top pool. It had everybody thinking it was going down, 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 and it reversed because it's not time yet. And it's not time for those.
No,
that's typically what happens. But when people are just looking at candlesticks and not actually looking at
they
the
get
order
scared.
book, well, and not only that, it doesn't actually make sense to them why that's happening. Which is people are like, why is this happening? It's got to keep going lower, but they're not understanding why price is bouncing on these levels, right? And it's simply price is falling into a large number of orders, right? So when you look at it like that, it's kind of like, not predictive, but it gives you X-ray vision on where the order book actually is, where the orders are, and where price is likely going to move.
Right. Yeah. I love it. I mean, I sleep at night just focusing on liquidity and price. That's it.
It's crazy after kind of looking at the liquidity, thinking what it is like to be looking at charts without it, because I spent years not looking at it, right? In the early days, just looking at candlesticks, and it's crazy to see it now, like how much of an edge it actually gives you in knowing, I guess, where price can go directionally on either side of the book, right? Long or short.
Yeah, before I got my brain transplant, when I was a retailer, I used to look at just indicators and not the liquidity. Liquidity lets me know what is actually happening from a business standpoint, inventory and selling that, acquiring and selling inventory. Yeah.
So what do you think are the time scale to reach that red region to take liquidity from there? Are we talking about the next couple of weeks?
Yeah,
or what?
yeah. It should be in play because this is the third impulse. The market loves threes, so this is the number 3. So this one should be the hammer. It should do some damage.
Right. We're looking at that.
Yeah, it loves threes. We've already tapped into it 3 times, so it might not take it all, but it should really hit it hard though.
We've been discussing price discovery should get us potentially another
past 150. Yeah, 20% past 155.
Yeah, no, I've never used it on this. There it is. 20. 169, 170 potentially if it goes 15 to 20% more. I think 20% we discussed.
Yeah, from the top past the 155 level. Yeah, it's got to clear the 155. So 20% from there.
That would probably be the best. That would probably be a really good outcome. Giovanni, what would you say if we get to 174 as a top?
It's in the realm of possibility,
What's it saying on your indicator? 174. What's the percentage chance in 90 days? Let's say
it's 5%, but yeah, okay.
But it is a bull run, right? So the behavior is different.
What needs to happen is that yellow curve that I showed before needs to start to go to higher values. So if it goes to higher values, then it's possible. If it stays in within that green and red region, then not.
So the Monte Carlo, so that simulation, that indicator has no bias in terms of the period of the cycle, right? So it's equally weighted the downside and the upside. So it's a little bit, it's more neutral than it should be in this kind of market. Let's say hypothetically.
It is done on purpose. So now we can fix it. If we see what can be done instead of starting. Right now we are using basically the total stats instead of using the local stats. So I can add something that I'm going to work on. I can add as an option where you can switch and say, give me the stats that are working now, that are over the last 2 weeks. That is done on the lower panel where we see the mu for the recent mu. but I'm not using that for the Monte Carlo. But I can put it as an option where use total stats over, basically the history of Bitcoin, or use local ones. If you use local ones, then, if we have a very high mu, and mu starts to go above, it needs to go in the 20, 30, 40, and that basically shifts the entire distribution. And then we have more chance. You will see that is not symmetric, like it is now. But
Yeah.
right now, it works well because basically we have follow the power law very closely. But I will add this option.
Yeah. Should we have a look at the performance?
Let's look at the algo.
Yeah. So, and then we'll come to you, Sebastian. I just want to go over this. Yeah. So, one thing I wanted to discuss today is we actually just took profit on the high frequency one that we've set up for this call. What I wanted to discuss and just talk to a lot of people, because I know there's people that have just signed up with us, and I guess when people get a bot, they expect it to be doing like a million things at once. I think it's just a thing that people have in their heads. Like bot means lots of activity. So the last sort of month has tested a lot of people's patience, because you can see we entered in the 15th of August and it's taken till around the 10th of September to take profit. Now, for a lot of people that are running these bots, it looks like nothing's happening. Plenty's happening. It's just happening under the hood. So for us who have been running this for a really long time, this is really exciting, because 1, 2, 3, 4, 5 safety orders is almost 5% of the total volume that this bot could ever have. So it's almost like at 50% strength, right? If you can imagine, a base order is usually like a 1 to 3% of initial strength. This position is using up 50% of the strength. So with regards to its volume, it's going to be a very significant profit. The thing is, with the market being so slow, we can see this range here from the 29th of August until the 10th. The action's just quite slow, right? Nothing really happened. This would have been nice if we took a TP here and reset, but we missed it. Same for here. Like, in an ideal world, it's nice to close these deals a lot faster. So, for example, taking this TP here and then resetting and going down would have been nice. Taking a TP here and going down would have been nice. But again, the market doesn't behave in the way you want it to. It behaves in the way it does. So you can see here that no matter what happened, we were able to take full advantage. It's just patience, right? And sometimes a lot of people, they expect more from the strategy, but they have to understand that this is not a high frequency trading strategy. It's really using the principles of DCA, which way it makes it so safe. And we can see here, this is the one with the larger TP. This one entered 3 safety orders, and it's got this really large TP that it's heading to now. So yeah, I don't know. Did you guys want to talk about that? Because it's funny. We do get new clients or people that haven't been running the algo for a while. They tend to send us messages during these sort of, let's call them quiet months, when the month's a little bit flat. But rest assured that it's doing what it's supposed to do.
It's just understanding as well that, by the nature of what we're doing here, there's times where you're going to join the program where the conditions are extremely good, and then there's other times where you're going to join the program where the conditions are flat. And what's important to understand is that results need to be given enough time to average out, right, the real expectation and the reality of what you're going to see. And most of the time, it's completely fine, but it's just sometimes, you need to realize that when you're coming into something like this, there needs to be an expectation around longevity in the market and doing this for a long time. This, once again, isn't something that's going to produce you riches overnight. So you need to give it enough breathing room to show its power. And sometimes a couple flat months is not going to do that, right? It's about the average over a period of time. And at the end of the day, like, I hate to say it, but the truth is it does just come down to emotions, because if you're feeling upset and annoyed and impatient, like, at the end of the day, the system's making gains. You just have to allow the breathing room to do its thing and just realize that every system in the world and all of us are still at the behest of Bitcoin's volatility, right? And that's the reality of what's going on. And some months, Bitcoin's extremely volatile, and other times it's flat. But if you're profiting in any regard in this market, you're already in the top 1%. That's what you need to realize, because most people are daily exit liquidity on the liquidation heat map, right? So, it's important to understand that as well, that if you're surviving and profiting, you're an anomaly in this market. That's the truth.
Yeah.
Yeah, that's true. One thing I wanted to add is sorry, Giovanni, go
ahead. No, go ahead. Finish your thought.
Yeah, I was just going to say, like, this little move here, you can see it entered this morning and it's about to take profit this morning. So that would be really a couple of hours trade. Really nice entry and bang. And people love to see 10 of them happening in a month. But in reality, it's this big slow movement that's able to create all this volume and then take profit here. It's going to generate more returns than having 5 to 6 of these tiny little base orders that take profit. So one of them gives you the dopamine hit of making lots of trades and closing deals. The other is a bit of a slower grind, but at the end of the day, it's all about the absolute returns at the end of the month or at the end of the year. To be honest, judging it month by month is not even fair. Judging it quarter per quarter is much better, because things do take time. But it's really cool to see that when the market gives us the opportunity, we take it straight away. As you can see here, we took profit and we've started a deal again. So if the market was to, we entered here at 118 and now we've re-entered here at 113. It just gives you an idea that if this was a bear market, we would now have a huge range to be able to go down even further, and how we're able to actually walk the price down. You can see from this example, the price goes up, we're just going to walk it up, but we're able to also now walk it down. And, you can clearly see here that we've made a decent profit from a long only strategy, and the market has actually gone down. So just remember, we entered at 118 and we took profit at 114. So the market's gone down, we're long only, and we've made it profitable. Now, if you can see the magic in that, then I don't know what's stopping you from joining the program.
And so I'm going to make these I know that I will get some pushback from other influencers, but I'm going to make this almost like a slogan. And the slogan is, the time of hodling is over, And what do I mean with that? Well, you can still do hodling, and of course that is the foundation, right? It's a little provocative meme, but if you thought of it just hodling Bitcoin, unless you have hundreds or thousands of them, right, is going to change your life. That may be true if you did that 10 years ago. If you do this now, I don't know, every situation is different, right? But if you did it, let's say in the last couple of years, so even since the last cycle, many people joined the Bitcoin community last cycle, you are not going to retire on 1 Bitcoin, 2 Bitcoin, 3 Bitcoin, right? You need to do something a little more active. Now, you can use this as a wonderful foundation, and then try to build around the Bitcoin that you're holding. So this system is perfect because you can use it 2 ways. You can use it where you don't care about Bitcoin and you want to make money, to pay your bills or whatever, and it gives you an income, right? But the thing that really attracts me is to think about what can you do just by holding Bitcoin as a collateral and then get yield on top of that. And this system is perfect for that because I think it's designed for that, right? The idea is that, just to make it clear, in particular for the people that didn't follow previous shows, we are not selling Bitcoin directly. We are selling futures. So we are using Bitcoin as a collateral. You can do a mixture of USDT, in fact, even other crypto if you want. And then you're buying and selling these contracts that are slightly leveraged, with maybe a 5-pair leverage. And what that does is that basically will be the equivalent of just sitting on your Bitcoin, but now your Bitcoin get multiplied because whatever gains you make from this trading, you can convert it into Bitcoin. This is how I do it. And then what is to expect? Well, let me give you an example. Even a very tiny 1.5% yield per month that this system can do very easily. In fact, I am almost ashamed to tell you what the long-term averages are, because we don't want to count on them. I want to count on something that is sustainable. 1.5, I feel super confident, and the guys can confirm if this is a number that nothing can be sold 100%. So, this is not financial advice, all the things that usually people say, right? But my experience is that I'm pretty sure of a 1.5% amount is something that this system can do. Well, what that means? It means that if you do this for the next 10 years, so, Bitcoin has been always a long-term game. 10 years is not that far. So you're projecting 10 years, Bitcoin will be already something like 50 pair in 10 years from now. You are multiplying by a factor of 5 or 6 if you get this 1.5 yield. That means basically you're multiplying your Bitcoin by 5. If you start with 1 Bitcoin, you will have 5 Bitcoin. And if Bitcoin goes, to 1 million, you can do the rest of the math, right? So that is the way that you can change your life, by holding Bitcoin, but also having a system like this that gives you yield. This is the way that every Bitcoiner, I'm really strong about this. Unless you are already on hundreds or thousands of Bitcoin, then it's irrelevant to you. This is what everybody should do. It's really the new way of thinking about what being a Bitcoiner is. You need to be a little bit more active. You need to understand that now we have the opportunity with this entire ecosystem around Bitcoin to do things like this. We have futures, we have things that we didn't have before. So this is how you use these tools.
Yeah, definitely agree.
Sebastian, what is your opinion on this?
Yeah, well, that's exactly right. And I think, the reality is that anyone running our system who's run it for enough time knows that 1.5% is, a very, very achievable target. And I think the beautiful thing about what Giovanni is explaining is that it's really showing the effect of holding your Bitcoin and compounding it over time. And on top of that, when you are targeting a return such as 1.5% a month, you can put yourself in a position where the risk is extremely small, right? And this is something that's important to talk about as well, because typically, using your Bitcoin as collateral or trying to get meaningful yield on it always takes some form of risk. But, with targets like that, even targeting more than that, the system will handle it in a way where it disperses the capital and allows a lot of the risk to be removed. Now, this doesn't mean there's no risk. There's risk in using any futures market. There's risk in holding Bitcoin, right? So there's always a risk playing this game, but targeting 1.5 is something, not just that we assume it can do. Historically, all the data we have in our system, we can do more than 1.5% a month. But I love the idea of just going for something small that is achievable and showing what that result can do over time. Because Giovanni is exactly right? It's not about creating fear and FOMO, and saying that, oh, Bitcoin, the days are over. But we have to be realistic here, right? We're talking about Bitcoin's price being nearly $120,000, right? We're not talking about Bitcoin being $1,000 or $2,000 anymore, guys, right? Even the last cycle bottom, Bitcoin was 15,000. Well, I mean, we've gone up nearly 700% from there. So we've got to be realistic about, we all know how high Bitcoin can go, but of course the volatility and the year-on-year returns are going to dwindle. So the question now becomes, what can we do to actually get ourselves in a position where we can continue to benefit off Bitcoin's rise, but actually make it realistic, right? For people who don't have $10 to $20 million to inject into the market. And the reality is, if you want the yield that Bitcoin used to offer, you have to think outside the box, and you have to think of ways to get yield on your Bitcoin in a safe intelligent way. And, our system is something that you have total control over when it comes to the risk, right? So this is really important. It's not, dialing in some settings and hoping that everything is going to be okay. No, right? You've got total control over where you want your levels, and that's a very unique thing as well. So that's kind of my input on what I think on that, Giovanni. But I love the idea of targeting a small monthly return, because in this space, everyone talks about numbers that are insanity, right? Everyone talks about the most insane, ridiculous numbers, and people don't actually understand that, when it comes to actually real statistics and real numbers, even 1% a month is incredible. And it's not to say that, all of a sudden our system's going to do 1% a month. But the point is, what Giovanni is trying to show is the effect of compounding over time is so powerful that you don't need these ridiculous Ponzi numbers that everyone talks about to achieve a meaningful yield. That's kind of the clear message.
Yes, and please notice that message, right? Because if you hear other advertisement, other shows, we always talk about, oh, you can use this thing and you can retire, in a month from now or something like that. It's always a ridiculous stuff, right? But the rigor of what I have pushed for all this time is always, let's focus on the reality. Let's focus on what we are really seeing, and the reality is amazing if you have realistic expectations, So when we are talking about, so I just told you, right? Imagine you can multiply your Bitcoin by 5 and Bitcoin is 15 following the power law. We are talking about 75 per in 10 years. So that is what some of these kids that are buying these monkeys, etc., they are trying to achieve, and then they lose everything, right? But with Bitcoin and with something like this, your chances are realistic. This is actually what realistically you can do with Bitcoin. It's just that, you could do 75 before by just sitting on Bitcoin. Now you have to do something a little bit more active. But, this is why we have an automated system. You don't have to do this by yourself.
Yeah, I think it's what's really interesting is that we always say this algorithm's like a Swiss Army knife. Now, you can set up this algorithm, you can engineer it to make yourself 10, 15% a month, but the wheels are going to come off. The reason why we talk about these results of 1.5 or 2 or 3% per month is that that's when we layer in the power law framework. And when we layer in the power law framework, we have all our risk management is all defined by Giovanni's work and places the risk levels below the power law support. So it makes it the most safest trading model possible within the statistical ranges that Giovanni gives us. Correct, Giovanni?
Yeah.
And then those returns become 1.5, 2, 3% a month, sometimes more, sometimes less. That's just the reality. If you want to fly this tool as safe as possible, using the power law as your guide, they're the returns that you can expect. And what Giovanni's trying to communicate is even those returns at 1.5, 2, 3% a month on a compounding Bitcoin used as collateral, that's all you need to go from a 10x to, I think it's almost a 50x in a 10-year period, which is pretty insane.
Fantastic. Okay, guys, we have a couple of questions and then maybe we can wrap it up so you guys can go to sleep finally. Or wake up. What are you going to do? Sleep or wake up?
More coffee. No, we've been sleeping.
Okay.
Early start.
So let's look at the question. It's mostly a bunch of nice comments. Thank you, guys. You guys. Yes, I think so. I think it's actually a pretty focused show where we are talking about what is really happening with Bitcoin. There is this question. Maybe one of you guys can answer these.
I can answer this question if you like.
Yeah.
So it's a good question. And the way you want to think about Minotaur is not something that, has use with Bybit or BitGet. It's a tool that can actually be plugged into almost any centralized exchange. It's just about understanding that, of course, in different parts of the world, we have different levels of regulation that allow you to do different things. So the algorithm, the way you want to think about it is, if there's an exchange out there that allows spot or futures of decent size, there's a highly probable chance we will be able to plug in through an API connection. It's just understanding that if you're someone in Australia or someone in the United States, what those two countries can do in terms of trading is vastly different, right? So it's just understanding where you are located, what regulatory conditions you have to abide by, and either way, we can trade spot and futures, and both hold a lot of value. Even trading spot is very valuable as well. So that should answer the question.
What
But we are all trading. Well, all of us are using Bybit. By the way.
What we usually suggest to US users? What is the best solution for US people?
I think we discussed that on a call with them. It's the best. There's too many different ways they can do it, and it's best to just have a tailored approach. So just get on a call.
Yeah.
So please, guys, there is an address where you can go and actually watch a seminar, a webinar. And by the way, we are going to do. We're not going to announce it today, but maybe next time. We are going to have I think at least once a month, a dedicated webinar where we can go a little bit deeper, and it will be mostly for people that are interested in the system, and they will be invite only. But we will announce this. But right now, we did do a webinar some time ago. You can go and watch the webinar online, and then you can make a call. There is some information on how to follow through and make a call with our team. Okay, and then there is this question. This is for Marcos. They're asking about this bookmap, but yeah. So let me give you
trading.
Yeah, these. So Marcos is using this tool. It's called Trading Different, and so this answers your question. Just use this code, and you will get a discount. It's Marcos, it's representing them. You know these guys, right, Marcos?
Yes. They're really cool. Yeah, we met them at the Bitcoin conference in Tennessee.
So, I will let this, and you can. By the way, this video is also on YouTube. If you want to watch it again or you want to get information from it, it's called my channel is called Quantonomy. You can find it, and you can watch this video. But yeah, write down that code because it will give you a discount. Okay. Do we have some more questions? Yeah. This comment.
Oh yeah, I can talk about this. Yeah, look, the reality is that it's quite possible that for a couple of months, that's what it's going to do. If the market doesn't give us the opportunity, we can't generate more than that. There are months that it will do significantly more, and then it'll average out over a cycle. Like we're talking about a 4-year cycle. So the numbers that we've done, because we've done a lot of sims, is that our 3% per month target, 3 to 5% per month target, is annualized and averaged over a full Bitcoin cycle. That's 4 years. That means that there are months that have 0% because we're in a trade like this one here that you can see on the screen. Sometimes it'll do 1%. Sometimes it'll do 5.6%. There are months when it'll do as high as 20%, even more. These are really rare, but these are when the bot is fully deployed. So to have something that does 3% clockwork is
well, it's just not reality. This is not like we're not talking about owning a rental property and having a guaranteed income fixed every single month, right? And I think this is where people get confused. The system can, of course, produce these numbers, but you have to realize that in a market, it's lumpy, and you could have a 60-day period with 0 gains and then a 12% growth on the account. So it needs to just be realized as well. that this expectation that the market is going to give you a predictable exact monthly return is actually incorrect. And sometimes it can be very, very lumpy, and other times it can be very, very consistent. And the reason for that is because we're trading Bitcoin's volatility, and that's something that we can't necessarily predict either. So it's just, being realistic and realizing, once again, if you are going to work with us, we're talking about long-term sustainable compounding growth for a long period of time. And if you're someone that is going to be watching your account like a hawk and freak out 1 month in that you haven't made 5%, you've made 0.5%, like, this might not be for you, because you need to be able to give this thing the breathing room it needs to produce meaningful results. This is not a system to be watched and micromanaged. This is a system to give you back your freedom and time. Let it do that, right? Let it do that.
Yeah, that's so important. You people come to an automated system to get back their freedom and time, to not have to do any of the thinking. And it's getting you these returns without having to lift a finger. I appreciate what Richard's saying. Actually, thank you for your comments, because there's nothing to hide behind. Like, it's executing the way it's supposed to execute, and in our eyes, that's all that matters, right?
We are so transparent. Look, we are showing all the trades. We are showing what exactly happens. We are telling you realistic results. We are putting our money where our mouth is, because we are trading with these things ourselves,
Yeah.
And we do these shows where we talk with you, we take any questions. I really literally don't know. I have to think really hard of any other setup like this. I don't know, because I hear, I get bombarded all the time by ads of any type, of all this trading system. Use this other, try these. And I don't ever see anything like this where they are actually doing weekly shows. They are open, they interact with the public, and they also talk about realistic results, because it's always about how, you can get reach within a very short amount of time and things like that. We're talking about, this is why I talk about 10 years, because
exactly.
It's a long.
They often, No, that's right, Giovanni. They'll often post like options trades with pictures after the fact, right? But it's like, okay, show us the live position, because anything can be. So that's a good point, Giovanni. And I
just posted my live trade right now. I say, guys, I'm looking for this. I'm waiting until the price goes 117. When it goes, I will cash in. There is nothing hidden. I'm showing exactly what is happening live, moment by moment.
Like this one right here. This is live right now. You can see, there we go. Look how close we are to TV.
It's unbelievable. So you can see it right now, right? When the price goes there, this algo will cash in, and then you can take this and buy more Bitcoin. Instead of, you can continue to do what you're doing. That is, everybody should put a few $100. It depends on your job and where you are in life. Everybody should do DCA, but this is an additional DCA, because you are using your Bitcoin to actually make Bitcoins. It's like crazy. Why will you not want to do it? Now, if I want to think about the biggest risk, is keeping your coins on an exchange, right? You don't have to do this with all your coins. You can do it with a percentage of them, maybe 10%, 20%. It's an existential risk. It's a limited risk. It's a calculated risk. There are, on these exchanges, there are literally billions of dollars now, right? They are much more serious and professional than many years ago. Eventually we will have hopefully, some DeFi solution. The reason why we are not recommending them 100% is because, they don't have a volume. They are not easy to use, but we are going there eventually, then that risk is also gone. So that is.
But there's risk in storing your seed phrase. There's risk in this game has risk, full stop. You got to choose how to diversify your risk in a smart way. That's just the reality.
Okay, guys. Thank you. I same thing. Exactly. And this is why I joined this guy, because I like this team, and I praise them all the time, with my girlfriend, my friends, because they are real guys, and this is also when they approach me, they actually, I tell this story all the time. They were afraid that I was going to tell everybody what maybe didn't work or whatever, and yeah, if you didn't deliver, this is exactly what I will have done, but it works. And I joined the team, so
That's our favorite story, isn't it?
And same thing with Marcos. Marcos was a customer in the past, and then he decided to join the team because it works, Anyway, guys, thank you so much to stay with us this Thursday evening, and thank you guys in Dubai. I hope you continue. When are you coming back, guys? Next week.
Next week.
Next week, I'll be back.
Okay, and we will be here next week too. So join us. If you want to DM me about the system, DM me if you're on X. Otherwise, book a call using that link we showed you before. All right, guys. See you next week. Bye.
Thanks, everyone.